Here we are. We are live this morning. Good morning, everybody. This is Leslie Hobbs with Charles Ruttenberg Realty. And this is
Mike Getz, Security National Mortgage.
And the purpose of our seminar this morning is to help first-time homebuyers answer any questions that you might have and also help you gain confidence in an area that you probably don't know very much about. Just to let you know that I've been a realtor for 15 years, and it took me 15 years to start getting confident and knowing that I know what I'm doing. So we're here to hold your hand a little bit and guide you. So feel free to ask us any questions as we go along. We'll try to answer everything, but I'm going to just start by asking you, Mike, how long you've been doing mortgages?
Well, first of all, let me welcome everybody to the live event. If you're at home on your couch, relaxing in your PJs with your cup of coffee and your donut, fantastic. We're glad you're joining us. The mission that we want to help, Leslie and I would definitely like to help you achieve the dream of home ownership. So I've been a lender. I started out in the banking industry with First Union National Bank. They were the fourth largest bank in the country. And I started my career with them in Tampa, and then became a dedicated mortgage loan originator in the late 90s.
Wow. So you've been doing this a while, and you've seen a lot of variations and innovations and changes. And okay.
I have, and we could talk about that. But more importantly, how did you start in the business? How long have you been in the business now?
Well, I was looking for a career change in 2004, and a friend of mine was in Clearwater, and she was a real estate broker, and she was looking for agents. And I have always loved helping people. I mean, since I guess I should look at you guys, huh? I have been helping people since I'm a teenager, and I've done, humanitarian work in Haiti. I've done all kinds of helping things. And then I used to look at Realtor.com for fun, so I was like, well, this sounds kind of interesting. Why don't you tell me a little bit more about it? And I wound up going to real estate school and getting my license in 2004, and I've been doing it full-time ever since.
I think that's something that I wanted to touch on. I don't know if it's okay for me to talk about this, but, there are full-time realtors and there are part-time realtors. Oh. And you said you were a full-time realtor. So, there's so much more that the buyer is going to get in the way of knowledge and expertise and knowing what pitfalls to avoid and all those sorts of things by having somebody that's a seasoned professional and somebody that does this full-time. I mean, Can you elaborate on that a little bit more?
No, it's true. I mean, because if that's all you do and I'm available 24/7, I mean, pretty much the only time you can't reach me is when I'm sleeping. I turn my ringer off. But other than that, I'm always available. It affects us too as full-time realtors when you have part-time realtors. I remember in January, I was trying to show a house and the listing agent wouldn't return my calls. And at 5:15 in the afternoon, she finally called me and said, sorry, I just got off work. And I was like, ooh, wow, that's kind of hard. So, I mean, I understand you have to do what you have to do to survive. But I think if I was going to work with somebody, I would want to work with somebody that dedicates their life to doing what they're doing,
I think that that's so commendable, that not only do you practice real estate as a way to make a living, but also your primary mission is to help people and getting to know you. I've seen that, and the mission work that you've done with Haiti and all those other things. One more personal thing before we get to the whole business of why we're here, first-time homebuyers. Okay. But I have stalked you a little bit, and I found some information. I saw that you attended NYU.
Yep.
And I thought that was really impressive. So not for you to be able to brag about yourself, but what'd you do at NYU? What'd you study?
I studied music therapy.
Oh, okay. That's awesome.
I'm actually a trained classical pianist. I sing.
Oh, wow.
And I did help children with learning disabilities back in the day.
Oh, amazing.
Yeah.
Amazing. Okay. Well, before we award Leslie the Nobel Peace Prize, let's go on and talk about how we're going to help you guys, first-time home buyers. So, do you want to ask me a question, maybe?
Yeah.
Okay.
I'm going to ask you a lot of questions, but
Okay.
the first question I wanted to ask you, because I tell people that it's really important to get pre-approved before you start looking. And the reason I tell people to get pre-approved for a mortgage, in case you don't know, a mortgage is a loan, just like any other kind of loan, but this is a specific loan to buy a house or townhouse or condo, that kind of thing. But what is the difference between getting pre-qualified, which I see a lot of people have pre-qual letters, and pre-approved?
And I'm going to touch on something before I explain the difference. I'm going to touch on why it's so important for you as a buyer to have a pre-approval and how it helps you with your realtor. And so when you go to make an offer on a house with your realtor, if you have a pre-approval in your hand when you make that offer, that makes that offer a lot more desirable to that seller than if you were just making an offer. And I've seen in the past where realtors have made offers without pre-approvals, and offers that my borrower has made with the realtor that I'm working with, Leslie, where that offer might not be as much, but because they had a pre-approval in hand, theirs was the offer that was accepted. So I just really wanted to kind of put out there why it's so important to have a pre-approval. So the difference between a pre-qualification and a pre-approval is very simple. So let's say you just have an interest and you're kind of curious as to, I wonder if I would qualify for a mortgage. So you're talking with Leslie and she says, well, why don't I have my lender call you? So you call me and we just have a very nice conversation on the phone. I ask you a few hopefully non-invasive, non-intrusive questions about your finances, what you think your credit might be, that sort of thing. We talk about what the price range is that you want to be in. We kind of assess from that what the taxes and insurance might be on the particular type property that you're looking for or interested in, and then kind of assess the monthly budget. So based on the income that you state to me and all those different factors that we talked about, we're able to say, well, you would pre-qualify for a mortgage. Okay. Some lenders will take that even a step further. I've done this as well. Share my app with the potential buyer. They go ahead and do some information online. I pull their credit, and based on the income that they've stated to me and the assets that they've stated to me and a physical review of their credit, I now issue a pre-qualification letter. So now I've provided with you the letter. Now, let's take it one step further. Let's say, you know what, I want to have the best solid possible document in my hand when I make my offer. Well, then that would be a pre-approval. So we've done the first two steps, we've had the conversation, we've pulled your credit, but you've also now provided me with income documentation and assets. Typically, as simple as last 2 pay stubs, maybe 1 or 2 W-2s, and the last 2 months bank statements. With that information, I can now run findings. Desktop underwriter findings doesn't really mean much to you guys, but it's an automated underwriting engine, and it's an actual approval that I can use to approve your loan. And I can do that right from that very simple conversation on the phone with you. So now I've issued you a pre-approval, and in that pre-approval letter, I'm stating that you have an approved eligible desktop underwriter finding. That's solid. That's very meaningful to those listing agents.
Right. And also, it's not only, of course, it's for the sellers, and, it gives the seller confidence to accept your offer. And once they accept your offer, they take it off the market, right? It gets listed as, it goes from active to pending on all the search engines and on the multiple listing service. But, for you also, you don't want to fall in love with a home and then find out you can't afford it. So once it's smarter to know what you can afford first and then start looking. Now, I have a question for you, Mike. what if somebody is paying $1,500 a month for rent? Given the fact that we know, supposing they're going to be approved, can we work backwards and say, like, if they're paying $1,500 a month for rent, about how much house could they afford?
So that's a great question. And often enough, when I talk to borrowers, they have no idea of a factor or a formula that they can use to kind of assess, how much house does my budget buy me? And so a good rule of thumb is $60 to $65 a month for every $10,000 in loan amount equates to what you can buy. So for example, $1,300 a month would be $200,000. So you guys see how I arrived at that? $65 a month for every 10,000. Okay, 650 would be 100,000. 1,300 would be 200,000. 1,950 would be 300,000. It's a great way to arrive at a budget.
Awesome. Now,
I have a question for you.
Yes, ask me.
So what about Zillow?
Oh.
Talk to us about Zillow.
Well, Zillow is not a real estate tool. Zillow is a marketing tool. The purpose of Zillow really is for Zillow to make money with ads. And who advertises on Zillow? Real estate agents, not me, but people looking for buyers, right? So you click on a property that you like on Zillow and you might get the listing agent, or you might get 4 or 5 other agents who are advertising for leads on Zillow. So a lot of times the information that you find on Zillow, it's not accurate, it's stale. A house that goes under contract, it might still show active on Zillow for even a couple of days, So you don't always have the most accurate information on Zillow. Now, I have an app that I could share with you if you want, where you could actually hook into the multiple listing service or the MLS, which is what realtors use, and you can get all the information on the house in real time, with one exception. And I'm sorry, I printed this out and I forgot to bring it with me. On the MLS, you've got public remarks, which everybody sees, and then you've got realtor remarks, which are confidential. And I've seen several listings, and this is really not. Anyway, it's a good idea to have a realtor help you, because sometimes you'll just have this beautiful description in the public remarks, and then in the realtor remarks, it'll say confidentially, home has had sinkhole remediation or settlement issues, please see engineering report. And that's something really important that affects the value of a home incredibly. It might cut it in half, so that's something that you really need to know. So I can hook you into the MLS. You can see all the public remarks, and then you can ask me any questions you want about a property that you could be interested in.
And that app that Leslie was talking to you about is fantastic for first-time home buyers, because we talked about that $65 per 10,000. Well, the app that Leslie is talking about is Snap, Security National app, and it has a loan calculator in there. It's got so many phenomenal tools, but it's a great app. Yeah, absolutely. We're spending some time talking about the real estate process, the lending process, as it relates to first-time home buyers, and I think that a lot of the questions that sometimes people ask is, well, how much money do I have to put down on a house? Or, lots of other questions like that. And I think maybe we might want to dive into some of that stuff.
Yeah, that's a question I get a lot. And many people think that you need 20% down payment, which, in an ideal world would be wonderful, but not many people have that anymore. But there are so many other options now. The Federal Housing Administration is called FHA, and there are FHA loans where with 3.5% down payment, you can get into a home. So we're talking like, on a $100,000 home, $3,500, on a $200,000 home, $7,000 down payment. And then closing costs, there's always room for like getting some assistance from the seller. There's creative ways to finance things. Also, a down payment can be a gift, right, Mike?
Yes. So, and not to get too deep into details on different loan programs, because of course we'll help you qualify for those. But on a conventional loan, you can qualify for as little as 3% down. So, and USDA, if you're in a rural area, is 100% financing. One of the things I did want to mention, though, when talking about loan to values, there's a lot of the public that are veterans. Thank you for your service. That apply for loans, and they haven't been educated as far as what a VA loan means, what it entails, and so whether you're a first-time home buyer or not, if you're a veteran, 100% financing means 100% of the purchase price or appraisal, whichever is less. So anytime you purchase a home and you're going to get a mortgage, right? You're going to finance a portion of that purchase, then it's always based on purchase price or appraisal, whichever is less. The loan to value, so on a VA loan, if it's 100%, on a conventional loan, if it's 97%, et cetera, does not include closing cost or prepaid expenses. So since you're first-time home buyers, most of you are, what I thought I might do is share with you a little bit about the difference between closing costs and prepaid expenses, because you're going to want to know, okay, so on average, just think of it this way, for closing costs, typically you're looking at about 2.5% of that purchase price. And then once you get to that $5,000 mark, it kind of tops out, because incrementally, it's not going to increase that much. You have your set costs that are going to get you up to about that amount. So at around 250,000, you're going to kind of cap out on those closing costs, and it's not going to go up much from there. What a lot of people, and everybody pretty much understands closing costs, okay? What a lot of people don't understand is prepaids. So when you get a mortgage, there's things that you're going to prepay. So one of those is your homeowner's insurance. So your homeowner's insurance is paid in advance. So you pay a year in advance for your homeowner's insurance. So that could be $1,500, right? And you have interim interest. I won't get into a lengthy discussion about that. And then you have your escrows. And if somebody has a question about that, we can maybe address it later.
Wait, can I just insert a definition for escrows?
Sure.
Okay, so escrows are a little bit of money that you put aside, that whoever's holding your mortgage puts aside every month. So once you've paid your first year of homeowner's insurance, let's just say, because it's a round number, it's $1,200, okay? Then every month after you close, your title company, or your mortgage company is going to take $100 a month out of your payment and put that aside in what's called an escrow account towards your next year's homeowner's insurance payment. So when it's due in a year, you don't have to worry about it. It's already going to be taken care of by your mortgage holder, okay? So the first time you pay for your 1 year homeowner's insurance in advance, and then it's set aside a little bit by the mortgage holder for next year's. Okay, we've got a question here. Hi, Don. I thought homeowner's insurance was included in the mortgage. That's right. It is part of the mortgage, but it's not actually going towards the loan on the house. It's going into the escrow account towards next year's payment, and then they pay it for you. So it's included in your mortgage payment, but it's not actually part of the mortgage. Does that make sense? Is that right?
So yes, absolutely. So if you put 20% down, then you have the option to not include your taxes or insurance in your payment. You can pay them on your own. If you don't put 20% down, then it's a little bit more of a layer of risk associated with the loan. So the lender is going to make sure that those get paid. They're going to establish that escrow account. What might be confusing to some people is, well, if I paid a year in advance, then why do I need to make monthly payments on my insurance? I get that a lot. And so when you pay in advance for your homeowner's insurance, if you refinance or sell the home 6 months down the road, whatever portion you haven't used, you're going to get refunded to you. So it's just paying in advance. It doesn't mean you're giving something for nothing. So once you get a year from now, that year that you paid in advance is used up. By now, they'll have those 12 months in there because you've paid it every month. So now another year will be paid in advance.
Good. And also in the escrow account. Hi, Miriam. Nice to see you. Good morning. You're very welcome. Thank you for being here. The other thing that goes into an escrow account is your property taxes. Okay, property taxes are paid once a year. And when you buy your house, usually they collect for the first 3 months, right? And property taxes are paid from the day that you purchase towards the end of the year. So let's say that you purchase a house on June 1st. So the seller pays the property taxes for that year up to June 1st, and you'll get a credit at closing for that. And then you will pay from June 1st to the end of the year for your property taxes. And those, you'll pay for the first 3 months when you close normally, and then a little bit is collected each month from your lender, and at the end of the year, they pay your property taxes for you.
A lot of what we're talking about is, I just thought of this, is what happens after you get your mortgage and when you're closing on your home. I think let's focus a little bit more right now on, well, how do I, what are some of the questions that I have as a first-time home buyer that, that you guys get a lot that we can maybe answer for you. And if we don't address the questions that you have, please, just access your Facebook right there where you are and type a question in, and we'll be happy to answer it for you. We're getting a lot of comments and a lot of likes, and we really appreciate that, but we'd love to know if you have any questions for information that we haven't gone over yet. I think one of the things that I should probably talk a little bit about is credit.
Good.
So there's a lot of buyers out there who won't even attempt the mortgage process because they feel like, oh my God, my credit's so bad. In reality, it's not, trust me, but credit is a very personal thing. There's people out there that are extremely proud of their credit. Boy, they'll let everybody know it. Oh, I got 800, yay. And then there's people that are almost, it's almost like a shame thing. Oh man, I've got a 590 credit score, and they don't want anybody to know that. And I think that I want to try and help people overcome that stigma, because traditionally the barriers to entry for credit are, you can have a 580 and above credit score and get a mortgage. So think about that. If you weren't credit worthy, would an institution lend you $200,000 to buy a house? So we have to kind of get out of this whole stigma of, oh, I'm not worthy of buying a house because my credit's bad. It's not true. And then the other thing that I want to talk about is that you won't know unless you ask. So when you reach out to Leslie, if you're not sure what your credit score is, she can have me get in touch with you. I can pull your credit. And here's the worst thing that'll happen. The worst thing that'll happen. First of all, we'll never say no, right? It might just be a not right now. But what we will do is we'll ensure that we give you the specific details and information of exactly what it is that you need to do, how much it's going to cost you, and in what steps you need to do that so that you can get your credit score where it needs to be. And we don't charge you for that. We want to help you achieve home ownership. So, this is definitely a value-add service that we're going to provide to help you get to where you need to be. So
if somebody doesn't qualify today, we can give them a few steps to do that might make them ready in 6 months.
I will give you very specific steps. We have a tool called Wayfinder. And what Wayfinder does is when I pull your credit report, it gives me the ability to go in and very specifically, it will say if this particular consumer does A, B, and C, here's the credit score that they can expect. I will give you a copy of that report. It will in a very detailed manner, will spell out exactly what you need to do and how much it's going to cost you. not in the way of a fee, in the way of either paying down a credit card, paying off an outstanding account, whatever the choices are or the things that you need to do to get that credit score to the score they say it will get to.
Wonderful.
But again, we do not charge that. We're not a credit repair company. And, I'm sure that every company has its place, but I hate seeing people, I hear the stories all the time. Oh yeah, I gave this service $500 and I pay them $100 a month. Well, okay, there may be some situations where people need that service, but the ones that I've dealt with, the people that felt like they couldn't buy because of their credit, we've been able to help them and get them into a situation where they could buy, most of them in as little as 6 months.
That's awesome.
So,
battery's running
let me
low.
plug in my battery.
So hi, Natalia, nice to see you from Boston. I have another question, but okay, I'm going to answer a question for you that hasn't been asked yet, but how much do I charge for my real estate services? So for buyers, nothing. So in the state of Florida, the seller of a home pays the real estate commissions. Okay, so you as a buyer, it's a free service to you to get somebody to help you along the way. And I also wanted to mention a couple of other things. One of the things I have to ask Mike, but if you have owned a home in the past and for whatever reason you don't own a house at this point, if you haven't owned a home in 3 years, then you are considered a first-time home buyer.
I can't believe I didn't talk about that yet.
Right?
Fantastic. Yes, absolutely.
The other thing I wanted to mention, this is a question for you, is if somebody has had a bankruptcy, how many years after that do they need to wait to get a mortgage again?
So I think here's where I'll get into some specifics, and this may take a little bit of time for me to go over. Oh, here, let me just tilt this down a little bit. I don't know how that happened. I didn't touch anything on it. There we go.
Sorry about that, guys. Okay, there we are.
Little technical difficulty. So there's very specific timeframes dependent upon the type of mortgage that you get. So would you like me to kind of drill down on each one of those, talking specifics?
No, I think just a really general answer right now. I think, isn't it something like 3 years?
Well,
or
no, so
okay.
You can get a mortgage one day out of short sale, bankruptcy, or foreclosure. It's just going to be a different type of mortgage. And since the way that rates on mortgages are calculated are based on risk, that might be a little bit higher rate mortgage if you've had a recent bankruptcy, short sale, or foreclosure. But generally speaking, for certain types of loans, it's 3 years from the time of the short sale. For other types of loans, it's 4. And as few as 2. So on a VA loan, it's different than an FHA loan, and it's different than a conventional loan. And if Leslie wants me to, I can talk about the different types of loans and what that means, but I think that might be a little convoluted for what we're doing here right now.
No, we don't need that right now. Yeah.
For credit events such as bankruptcy, short sale, or foreclosure, you can get a mortgage in as soon as 1 day after, but typically for the more traditional type mortgages, it's anywhere from 2, 3, or 4 years, depending upon which event you have and what type of mortgage you get.
Great. All right. Do you guys have any questions for us? One thing I wanted to talk about a little bit is the type of market we have here in Pinellas and Pasco County right now, which is a seller's market. What that means is we have more buyers than we have inventory. So it's an advantage. It's a good time for sellers to sell their homes. For buyers, it might be difficult. There might be more than one offer on a home. You might have to compete with other buyers, which is just one other reason to have a full pre-approval before you start looking. Okay.
I think one of the things that I want to talk about is the process. And so a lot of times when first-time home buyers are considering getting pre-qualified or pre-approved for a mortgage, the thought is, oh my God, well, I don't want to have to dig up all that paperwork, or, oh my God, I just, this is going to be, so in-depth and time-consuming, and it just seems so overwhelming. So what I want to do is first of all, is reassure you, especially if you're a first-time home buyer, that we will really assist you every step of the way and make it as painless and seamless as possible. So let me just give you an overview of how the process works so you can understand the steps. And the first step is reaching out to Leslie and letting her know that you're interested in buying a home. So Leslie will have her lender reach out to you. I'm one of the lenders that Leslie works with. So if I reach out to you, the way that process will work is first we'll have a phone call, and we'll just have some dialogue and talk about, okay, what are your goals? Where are you at now? Are you renting? How long have you been there? How much longer do you have left on your lease? All these are great questions, so we can kind of assess and get an idea of what your time frame is, kind of plan. So that first initial phone call is a great phone call just to kind of get acquainted and get a flow going on, what the process is going to look like. So then the second phone call usually would be, or the second step usually would be, I would share my app with you. My app is the Security National app. It's very simple to use. It's so funny. The first time I started using it a couple years ago, I texted it to somebody. They were like 28, 29 years old. 3 minutes later, I got that ding. Your applicant has completed their application. I was like, whoa, it's that easy. I was like, wow. And so when you get the app, it's real simple. It's a link that I text you. You click on the link. It takes you to the App Store. When you get to the App Store, you download the app. I mean, you guys all know how to do that, right? And then when you go to your home screen, the app's there, you open it up and you just click on buying a home. It's that simple. A few questions that you have to answer. Whatever you're not sure of, you can skip. I love that. Every line doesn't have to be filled out for you to advance to the next page. And usually takes 3 to 5 minutes. At the end, you click submit. I'll get a notification. I'll then call you back. I'll review that application with you. And we'll go into depth. We'll talk about payment options and what your financial goals are, and a lot of different things about your budget, what you qualify for. If you're not credit qualified, then here's the steps that you need to take to get there. So yes, we will pull your credit in that first meeting if you're ready for that. Some of you may not want to. You may just want to have a conversation and not have me pull your credit yet, and that's okay. We'll do that. So then now, let's say we've done the pre-qualification and have pulled your credit. I'll ask you to provide me some income documentation. I'll let Leslie know that you're pre-qualified and that you're providing income documentation, and that upon my receipt, we'll do the pre-approval. So now let's say you're ready. And so you get with Leslie and you guys start shopping, and Leslie will talk in a minute a little bit about what the process looks like on her side once you get there with that pre-qualification. But now you guys are shopping. Let's say you find a house. I've already received your income documentation. I've generated the pre-approval letter, which is really strong for you. You make that offer, it gets accepted. Yay. So at that point, Leslie will probably schedule your home inspection. She, again, will talk about those sorts of things. But when it's appropriate, and when Leslie and you, the borrower, have said to me, okay, we're ready for you to order the appraisal, we'll order the appraisal. And the value of the home will be assessed by a certified licensed appraiser, not related to anybody in the transaction. So then when we get that appraisal, then at that point in time, we've already pretty much underwritten your file. And we will ask for any additional documents that are needed to clarify anything or any explanations. And then that's it, pretty much it. You're ready to move towards closing and have closing documents generated to the title company for you to do your closing and get the keys to your new home. So it's a pretty simple process. It's not as daunting as everybody thinks.
Good.
Do you want to talk about maybe the real estate side of that?
I do.
Okay.
So I wanted to talk about looking for homes. Because I'm doing this full time, I am really aware of what's on the market. I check every day for what's new on the market, what price reductions have been made. So I have a pretty good idea. I work in North Pinellas and South Pasco. I have a pretty good idea of what's available. And you know, finding a home, searching online, it's something that you guys can do yourselves and you don't need an agent for, but things that I can help you with are like, it's really important to know the age of the roof. You know, the age of a roof on a home in Florida, if it's just a regular shingle roof, it's about 20 years. So if you see a gorgeous, fully renovated home, it's got updated kitchen, updated bathrooms, new windows, brand new flooring, and then nobody mentions the roof, but I look online and I find it's 18 years old, that's a red flag, because a roof's like a very high ticket item if you have to replace it. You know, there are other things that I might be able to see. Sometimes, not always, you can see when the air conditioning was replaced and things like that, because permits are pulled. For sure, a permit has to be pulled on a roof. I mean, no questions asked, you know. And then I also have several professional licensed home inspectors that I work with. And once you find a home, we write a contract. You know, there's a bunch of paperwork, a 12-page contract for purchasing a home. Actually, in real estate school, they taught us law. That was most of real estate school, was the legal aspects of buying homes and selling homes. When I first started in 2004 and I had to write my first offer, nobody ever taught me how to fill out a contract. They didn't teach you that in real estate school, right? So anyway, I will do all the paperwork with you. Then I will recommend 2 or 3 home inspectors, and you can choose one. Home inspection generally runs around $300, but it's really, really highly recommended so that you don't buy a house and then you're surprised afterwards. You know, you really want to know what you're getting into. It's a big, big investment, and hopefully it's the one that you're going to have for a long time. Once the home inspection is done, there might be some smaller things that come up that the seller can fix for you at their own cost, you know, because they want to sell the house. Or if something major comes up that you're not happy with, you can cancel the contract based on the inspection and start over again, all right? So once the home inspection is done, we get a termite inspection done, make sure there's no termites, which in Florida, one termite inspector said to me once, if you haven't had termites in your home, you will in Florida. But, you know, you just want to make sure, because it's pretty easy to maintain them, to make sure they're not there and keep clean, you know. And then it's just the financing, pulling the financing pieces together once the inspections are done.
And I really want to say, you know, I think it's so important. I think Leslie will agree with me that one of the most important things that you can do besides buying a home is you don't want to go out, find a house that you fall in love with, and then find out you can't afford it.
Yeah.
So doing the pre-qualification and / pre-approval process up front is so important.
And does it hurt them to have their credit pulled?
No. And so, you know, obviously, I would love for you to do your loan with me, but I also recommend that you shop around. I want to make sure that, you know, you guys get the best deal that's for you, and you work with the person that you feel most comfortable with. So the good news for you is if you have 2 or 3 different mortgage lenders pull your credit within a 30-day period, it does not affect it. It's just one credit pull as far as the rating services are concerned if it's a similar industry.
Great. Okay, any other, let me see. Do you guys have any questions?
I think we've gone over a lot.
We have covered a lot of information here.
Yeah. And I think one of the things that we didn't really get questions about that I normally do in these types of environments is down payment assistance. So, you know, hey, what if, you know, I'm a first-time home buyer, what programs are out there for me? So there's a lot of great first-time home buyer programs out there. Some of them are associated with down payment assistance. Some of them help first-time home buyers in other ways. So I think the best thing to do is reach out, because all those programs have different qualifications, and not, you know, it's not like one size fits all. So reach out to Leslie or myself, and I can go over those programs with you.
Very good, thank you. So did you guys find this helpful? And let me know if you'd like us to do something like this again, or if we didn't answer your questions, you can feel free to contact Mike or me. We put our phone numbers up there in the heading, and you know, we both respond to text messages. I probably will do something like this in the future for sellers, because that's an important area. It's the opposite side of the coin. But you know, I think that hopefully you have gotten from us that we are very caring and we totally have your back. Mike was telling me about somebody that had a lender one time, and they were looking out for their highest commission, and they were looking out, you know, they got a veteran into a non-VA loan that cost them more money because they made more money. And that is like, I just hate unethical people like that, because you know, I'm not money motivated. I'm motivated to make people happy, and that makes me happy. So I think that's about all we have for now. Thank you so much for joining us. And if you're watching this later on, thank you for watching it later on. And we will see you again soon. Have a wonderful weekend.
Bye.